Sorry for the delay. Good morning, everyone. All the participants for joining on a Saturday morning on a very important topic of preparation of a financial statement for a non-corporate entities, which largely cover trust, partnership, and other entities which are not a corporate bodies. So I think this is very important topic because even ICI has released a guidance note on the preparation of the financial statement, and to enable all this non-corporate to comply with all this accounting norms and the disclosure requirement, the accounting and auditing committee thought it fit to organize a session on this. And we have very learned speaker Padma Shri who would take over this topic. And last year also we have kept a similar topic on this, but to take the discussion further and to dwell on this matter, the committee thought it fit to again have this topic for the financial year ended 31st March 2024. So just to give a background, I think Padma Shri is very well known in auditing and accounting field, but just for everyone's introduction, Padma Shri is a partner in MSKC and Associate. She heads the quality and assurance function of the firm and keeping all its members updated about the latest technical development. She is a chartered accountant and having a number of years of experience in an accounting and auditing field of almost around 18 or plus years. She is well versed in IFRS, Ind AS, company law, and all matters related to an assurance function. So thank you, Padma Shri, for I think agreeing to speak on this topic, which is the committee thought is well timed because 2024 also the accounts finalization might be in progress. So your deliberation will really help participant in finalizing the matters with a proper disclosure and meeting the expectation of various regulators. Before I ask Padma Shri to start, I would also welcome President Vijay Bhai, and he can share his opening remarks about the CTC and uh, give a brief introduction about the CTC to our non-members. Vijay Bhai, just an introduction about CTC.
Thank you, Tejas Bhai. I welcome Ms. Padma Shri, our learned speaker of the day, Yogesh Bhai, Prashant Bhai, and every participant today. I'll not take much of the time. Just to quickly brief the non-members, that Chamber is a non-profit making organization formed in 1926. We are into spreading education in the field of taxation laws, whether direct tax, indirect tax, international tax, and so on and so forth. Most importantly, we are having our student committee also, which is taking a lot of care about the students and making various activities, maybe in the form of debate competition, essay writings, and of course, most popular moot courts in the field of direct tax. And recently, we also started moot courts in the field of indirect tax also. Friends, coming to the students committee activity, on Monday and Tuesday, we have two half-day workshops on basics of learning for article students, comprising of some of the topics relevant present. Let's say direct tax, that is income tax, GST, audit, some professional ethics, and so on for especially for newly registered articles. The session begins at 9 o'clock, ending at 1:30. Do encourage your article students to join these sessions. Ask them also to become member of the chamber and be part of the students' activity. Over back to Tejas Bhai for further proceedings.
Yeah, thank you, President, for an introduction of CTC. So I think this is the second session which an accounting and auditing committee is keeping. This first on was on audit trail, and this is the second topic. So I think we regularly, the committee always strives to spread a knowledge on accounting and auditing matters. And I think you can also share all your feedbacks as to what are the requirements, and the committee would strive to organize some training programs so that it would meet the training requirements of all our members, and let us all strive to be updated and in the latest developments. So the committee would strive to keep all the latest programs related to an accounting and auditing field. With this, I welcome Padmashri to start the session and on the today's topic. Yeah, over to you, Padmashri. Padmashri, you are on mute.
Yeah. Yeah. Hi. Good morning, everyone. Thank you so much, Chamber and its esteemed members, Vijay ji, Tejas ji, and Yogesh, for uh, providing me this opportunity to share the thoughts on this. I understand that this is a very, I would say, relevant topic because we are on the verge of closure of many of our clients' accounts, and all of us are actually struggling to will struggle to finish the September deadlines and things like that. Not only in terms of the private limited company audits, but then an audit is an audit, if I have to put it that way. But whether it is small or large, it takes the similar amount of time and effort. Similar by similar amount, what I mean is that um, to complete an audit from start to end, it's from the planning to the completion, planning, execution, completion. So closing one big file has its own intricacies and problems, but closing 10 smaller files also is not easy, because 10 times looking at 10 different balance sheets, 10 times looking at 10 different areas, maybe smaller, maybe medium size, but it has its own struggles, difficulties, or it has its own challenges. So I think from this angle, it's very important that we are aware of this latest format of financial statements of company and non-company entities. What do we mean by non-company entities? Is basically the partnerships, the sole proprietary. This does not apply basically to any kind of trust which wherein there is a format that is already available. For example, there are Form 10 and other formats that are already available. So obviously, this will not apply to those kind of entities where the format is already available and it is mandated by any statute or someone. So this won't apply to that. But other than that, it will apply to everyone else, whoever is an individual or a partnership or LLP. Now, coming to LLP, there are two guidance notes. One is guidance note on non-company entities and one is on specifically on LLP, because LLP falls under corporate, right? But then there are not a very big difference, only slight differences which we will talk about. Now, why we are talking about preparation of financial statements? In smaller entities, in case of the balance sheet or the financial statements, most of the things is like the client is dependent on us to guide them, to help them. So when we are actually auditing these kind of financial statements or certifying these kind of financial statements, what all are the things that we have to keep in mind, and what is the format of these financial statements is something that is actually very important to note, and we have to take care of these things. So that is the background. Now, coming to what is the background of developing the guidance note? What is the background of, like, where did this emerge from, and why did we think that okay, these financial statements for non-companies entities also has to be streamlined, or it has to come into a certain format? Now, for many years, we all know that the financial statements of non-company entities never had any definitive shape. What do I mean by that? We all know how to prepare a balance sheet. It's not that we don't know or we are preparing it wrongly or something, but it was in fluid form. Someone used to do it vertical, someone used to do it horizontal. There were multiple things that used to be done. Now there were various problems also. That some people used to prepare the schedules as well. Some people used to prepare notes as well. But there are places where there were certain places where the printout is taken from tally and it is signed as is. which is not so good, right? So a permutation and combination of all these things put together and a lot of errors in all these things put together led to development of a guidance note on this. There was an announcement already existing on the applicability of accounting standard for non-financial companies. So basically, we have through the Companies Act 2013, we have accounting standards that are applicable to the company, Ind AS that are applicable to the company, and then we have some other auditing standards, some other accounting standards, another set of accounting standards, if I have to say, that is actually formulated by ICI and it is applicable to everyone other than company also. Now, the accounting standards that are there in the Companies Act are also formulated by ICI and then it is notified through the Gazette as a process. But these are the accounting standards that are actually not applicable to companies. Now, we always had this level 1, level 2 and level 3. So, there was a need for revision of this also. So, the announcement came in 2021, I think, 21 or 22. So, the announcement came and then it was in that announcement is applicable to everyone. That the applicability of this 1, 2, 3, it is now 1, 2, 3, 4. We'll go into the details. And then, the announcement came and then it was sitting. Again, compliance with this announcement is mandatory for us as chartered accountants. Any announcement, pronouncement of ICI is always mandatory on us. So this announcement is supposed to be followed by us. However, the other part, that is preparation of financial statements, since there was no proper form, how people are complying with this announcement was a question. That's why at WRC, what we thought is that, let us prepare some format and then that will be better for people to follow. So that format actually came up based on this thought. After that format, then it got, then the accounting standard board looked at the format and then they said that this is a good one. Why not make it into a technical guide? So it became a technical guide in 22. And then it was a technical guide for 1.5 year. And now it is in the form of a guidance note, which is actually applicable for this financial year. So now it has got a proper authoritative pronouncement background that from this year, that is for 23-24, if you're not complying with the guidance note, then actually we as practicing chartered accountants are not compliant with the professional standards that is there. Okay, so that's the brief background of this financial statement formation and then why these kind of things have come up. So we will look at the applicability of the accounting standard quickly, and then we will go on to the format of the financial statements also. So this announcement that had come will supersede the earlier accounting standard. So this 31st March 21. This accounting standard, this announcement came in and this actually supersedes the earlier one. Okay. And then this became applicable from 2021. Basically, this announcement is existing from 2021, April 20 to 21. So this 1, 2, 3, 4 levels of accounting standards are applicable from the year 2021. And from that time, actually, there were various sessions and there were various training and other things that were held so that everyone becomes compliant of these standards. Now, this is the classification as per the announcement that I was talking about. There's level 1 entities, level 2 entities, level 3 entities, and then level 4 entities. Okay, so we will look at the classification here. Small and medium enterprise used in accounting standard has to be read as MSME. So irrespective of whether the entity is registered under MSME or otherwise, the classification is based on the criteria like turnover and other things. Let us understand this. We will take some time to get some insight into this. And then we will go ahead with further understanding, because this is the base or the core of everything. So classification of non-company entities. Entities which are listed or are in the process of listing of any stock exchange, whether in India or outside India. This will always be level 1 entity. banks that are cooperative banks, financial institutions, entities which are carrying on insurance business. Generally, insurance business cannot be done by someone who is not a public limited company, barring that any banks, financial institution. What is a financial institution? It can be a credit cooperative society, or it can be an entity that is providing some other kind of loan, help, anything. So all these things will obviously come under level 1. Then all entities that are actually involved in commercial industrial business activity where turnover is more than 250 CR. If turnover is more than 250 CR, it is going to be a level 1 entity. And then the borrowing limit you will see, which is 50 crores is the borrowing limit. And then holding subsidiary of any of the entities of any of the above. Now, how can there be a holding entities? First question is, can someone other than company get listed? Yes, it is possible. There is a listing of certain bonds or something that can be issued by some other form of entity, which is possible. It will be applicable to them. Then banks, we gave example like in cooperative banks. So we already have norms for private limited banks. We have for nationalized banks. Then we have cooperative banks and other banks. So it will be applicable to them. Financial institutions, we gave example of that. And 250 crore, more than 250 crore turnover, more than 50 crore borrowing. Then holding subsidiary. How can there be a holding subsidiary? If the entity is actually applying or its parent entity, in the sense where the other entity which holds control of this entity is following in the AS as the case may be, and it falls into the definition of control, then it is actually holding or subsidiary of that entity. So if at all the main entity is actually trying to consolidate. So say for example, there is one partnership firm which is holding one LLP which is holding some substantial interest in another company or in another entity. So that there is a possibility that they can consolidate it. So from that angle, this is possible. And we will have to look at whether there is any holding subsidiary of the said entity. So this is level 1 entities. Now coming to level 2, the first 2 categories go off, that is banks, financial institutions, and listed entities. The other things exist, that is turnover is between 50 to 250 crore. Here the turnover was about 250 crore. Here the turnover is 50 to 250 crore, and the borrowing limit is 10 to 50 crore, whereas in earlier it was more than 50 crore. And then again, holding subsidiary of any of the entities above. Now level 3 is turnover between 10 to 50, and then borrowing more than 2 crores. So this is a very small amount, and many of the entities fall into level 3, right? So borrowing more than 2, turnover 10 to 50 is level 3, borrowing 10 to 50, and turnover 50 to 250 is level 2, and above 250 and borrowing more than 50 or listed bank, all this stuff into level 1. And level 4, obviously, which does not fall into 1 to 3. That is all this category, when it is not getting classified under this 1 to 3, then it becomes level 4. So tiny entities where borrowing is less than 2 crore, I can say, and then turnover is also less than 10 crore. So anything that is less than 10 crore and 2 crore, that will fall under the level 4 entities. Okay. Now this applicability chart is as is taken from the announcement. There is nothing that that I have done here. It's as is from the announcement. So AS1 basically is applicable to everyone. I have not put in a level 1 as a column because all the standards are applicable to level 1. So we are talking about 2, 3, and 4. Assume that for 1 everything is applicable. So that is why that column is not here. So AS1, it is applicable to everyone. AS2, it's applicable to everyone. 3 is not applicable to 2, 3, and 4. 4 is applicable to 2, 3, and 4. Then AS5 and 6 is also applicable. Sorry, 6 is no more there. That is, depreciation is no more there. Construction contracts, if they have, it will be applicable to everyone. Revenue recognition, yes, to everyone. And then fixed assets, it's applicable to everyone. But then for 3 and 4, there are some disclosure exemptions. And for 11, again, for 3 and 4, there are some disclosure exemptions, that is foreign currency. Then 12 is applicable if you have the grants. Then 13 is applicable if to 2 and 3, but for 4, again, you have some exemptions. And then for 14, which is amalgamation and things like that, business combination, you will have 2 and 3 applicable, but it is not applicable to level 4. And 2 and 3 also applicable only if you are accounting in that fashion. If you want to do a merger or if you want to account for, then you have to account as per the standard only. You can't go out of the standard. 15 is applicable to everyone. Now that exemption of 50 employees up and above and all that will be there, actually, like actuarial valuation, no actuarial valuation, those stuff will be there. But 15 is otherwise applicable if the number of employees exceed the requisite limit. 16 is again applicable, borrowing cost is applicable to everyone. 17 is not applicable to anyone other than level 1 entities. 18, which is related party, is applicable only up to level 2. For 3 and 4, it is not applicable. Then 19, that is leases, where everywhere there is a disclosure exemption. We'll talk about the disclosure exemptions. 20, EPS is not applicable at all. Now 21, 23 and 27, that is consolidation, JV as well as investment in associate. So 23 is investment in associate, 27 is JV, right? So 21, 23 and 27, if we are doing consolidation, we will follow these principles of 21, 23, 27. If we are not doing consolidation, then we are not using this. If at all we are doing consolidation, we can't go to some other standard or somewhere else, but we have to do the consolidation as per this standard only. 22 deferred tax, it is applicable. Actually, as per for 1, 2 and 3, there will be a question that how deferred tax can be applicable to the this kind of entities. We'll come to it and we will look at it in detail also. But there are certain exemptions for level 4, wherein current tax is only applicable to them. Deferred tax may not be relevant for them. And then 21, 23, 27 we talked about. 24 is per se not applicable to 2, 3 and 4. 26 is again applicable to 2 and 3, and for 4 there are some disclosure exemptions. 27 we talked about. 28, again there are disclosure exemptions to 2 and 3, and it is not applicable to 4. And 29, again that's the provisions contingencies is applicable with certain disclosure exemptions. So this is the applicability chart. Now it's not about just reading about this chart. We will look at each and every standard as to what is applicable and what is not applicable in each of the cases, right? And I would advise till this season is over, we have to take a print of this and then pin it on our softboard so that we keep reminding of this. Another help is that we can make a very simple Excel if and formula wala Excel for the applicability. उससे क्या होगा कि when we actually make this applicability chart, we can put that if and formula and we can formulate that, and our staff or articles, whoever is working with us, first thing before they start the audit or the preparation of the financial statements of the non-company entities, they should be required to fill in that chart. Okay, then that chart can give you an answer as to whether the entity is falling into level 1, level 2, level 3, right? So once that level 1, level 2, level 3 gets decided, then this can also be made into an Excel by, if you think about, this can also be made into an Excel, and that Excel can actually say, okay, your company is ABC Limited is a non-company entity. It falls into level 2 accounting standards that are applicable. Then it will populate what are the accounting standards that are applicable. And then you can go into and start preparing the financial statements or start auditing the financial statements, which will be very easier. Okay. So these two Excel sheets will be a must if we are dealing with any kind of non-company entities. This will be our starting point. Why I'm taking a little bit more of time over here is that because this is the foundation of our entire financial statements. And if we actually go wrong here, then entire thing goes wrong. And that is why it is very important for us to ensure that we are actually appropriately identifying what are the financial statements, what are the standards that are being applicable to the financial statements that we are preparing over here. So these two Excels, if you can get made, it will be very easy and handy for you to then go ahead. Yeah. So there was some note 2C and 2D, right, that we saw. So notes 2C was in terms of, if I have to show here, this is for consolidation. Sorry. Yeah. So we saw that note 2C and 2D, right? AS 14, you have note 2C. Then 21, 26, 23, 27, you see note 2C. So what is note C? Note 2C. In case of level 4, that is non-company, level 4 non-company entities, there is generally no such transaction as AS 14 or 21 or 27. However, these are not applicable. However, if there is any transaction, then for accounting you can't go out. You have to adhere to this standard only. And then note 2D again. Generally, consolidation does not happen. However, if you want to do consolidation, then you will fall into these standards only. Use the principles of these standards only, and not go outside these standards. Right. Now, let us look at some of the accounting standards that are applicable. So what I have done here is that I have not plotted the entire accounting standard, because that everyone is aware of. Just pulling out the exemptions or whatever we have spoken about here. For example, we have said that in AS 26 that it is applicable with some disclosure exemption. So we'll mention this level 2, level 3, then this disclosure exemption. What is the exemption? Not reading through the entire standard, because then that will take ages. That we all know. And that is why not covering the entire standard, but what is the exemption? Now, in coming to AS 10, which is actually PPE, the exemption is basically for only for encouraged disclosure. So there is a section in PPE many of us must not have looked into, honestly, because this is again an encouraged disclosure. So this encouraged disclosure is exempt for level 3 and 4 non-company entities. And what is that encouraged exemption? The carrying amount of temporarily idle PPE to be shown separately, gross carrying amount of fully depreciated PPE, revalued PPE of such class, the carrying amount of the asset if it is carried under cost model, and carrying amount of PP retired from active use and not held for disposal. Now, this is an otherwise also encouraged disclosure, so many of us must not have thought too much about it. We don't look at things unless it becomes mandatory. Now also we are looking at non-company financial statements because it was there from 2021 in the form of announcement. Then there was a technical guide, and today it is a guidance note, and that is why it has gained more and more importance that everyone has to be compliant with this format, right? Then AS11, encourage disclosure again, foreign currency risk management policy. This may not be required otherwise in the level 3 and 4 entities. Accounting for investments under in AS3, other disclosures specifically required by statute governing the enterprise. Now, this is a overriding thing, right? So let's take an example that if there is an AIF, that is alternate investment fund. If there is an AIF, then actually SEBI already guides and provides the list of disclosure that is required. If that is already required by SEBI, then that overrides the requirements of AS 13. And that's how there is a disclosure exemption over there. So this kind of disclosure is not applicable to level 4 entities. So if at all there is another body that is actually imposing certain disclosures, then those disclosures will have to be given by the entity. AS 15. Let me summarize this. For a larger company or for a larger entity. So the various things that are applicable is, say, I'm just taking example of gratuity, leave encashment, superannuation. Okay. So if the company has all the three things, gratuity is statutory, and then leave encashment, superannuation, or some retirement benefit. If they have all these, then if it is in a larger entity, then you have to get the actuarial valuation done. And then the disclosure is generally in the form of 5 to 6 tables. So one is like the overall asset portion, asset status, liability status, then what is the return on plan assets and things like that. Then the reconciliation, that is the moment of last year versus current year and how much is the charge to P&L. Then there will be two more tables. One is actuarial assumption. Within that, there will be one or two tables, all that rates and stuff like that, discounting rates and everything. Then there will be another table which actually talks about the experience adjustments and all these things, right? So this is the elaborate thing that is applicable to the larger entities. Now, what happens in case of level 2 and 3? The 11 to 16, that is recognition measurement of short-term accumulated compensated balances, that is leave encashment, which are non-vesting. So the detailed disclosure that you give in the form of a table, there is a exemption for that. For para 46 to 139, that is the detailed discounting amount and all that detailed assumptions that you provide, that is exempt. And then para 50 to 116, that is recognition measurement of employee benefit obligation, post-employed benefit obligation, asset and cost. So that reconciliation disclosure is again exempt. And then 129 to 131, that is the detailed disclosure of the long-term benefits. So these stuff is exempt. So basically, you'll be giving the shorter version of the disclosures. You will not be giving that longer version of disclosures. You will give only shorter version of the disclosures of AS 50. So this is actually similar. And then the change is only above 50, below 50. That is where there is more than 50 employees. Then there is less than 50 employees. Then further exemption on the actuarial valuation as well. Correct? Now coming to AS 19, that is leases. So in leases, what happens basically, we classify it into the type of lease and then we give the disclosure in the lease that, the minimum lease payments, and then we also give a reconciliation, and then we give a table for 0 to 5 years, 0 to 1 year, 1 to 5 years, more than 5 years, that table we give. So now this reconciliation, this 1 year, 1 to 5 year and more than 5 year wala table, and then minimum future MLP that we pay, and then sublease detail, that's like the table, the tabular detail of sublease, contingent rent payment detail, renewal purchase option detail. These things are exempt for level 2, 3 and 4. These things are still applicable to level 1, but these things are not applicable to level 2, 3 and 4. Other disclosure like type of lease, what is the tenure of lease, what is debit to P&L, this kind of a short disclosure will come in the financial statements. Okay. Then this is for, one is for operating lease and one is for finance lease, again in the books of lessor, in the books of lessee. So you will see 4 slides accordingly. But conceptually, the longer disclosure and the shorter disclosure is the difference. And the reconciliation table and MLP payments and the purchase option and stuff like that, these are the exemptions. So that is why you will find 4 different tables, right? Then AS22. AS22 is very different here. And then it is very important to note the transitional requirement also. Now, there is when we come to AS10 and AS22, I'm giving a simple example here in terms of AS10 and 22. What happens is, say if we are doing preparation of financial statements of a company. So we have schedule 2, we have depreciation rates, we have SLM, we have WD, right? Now, accounting is done on the basis of schedule 2. And then income tax calculations are done as per the taxation requirements and the percentages that are applicable on the basis of income tax rates, basically. There is always a difference between the income tax and the Companies Act, and there arises a DT. Now, for non-company entities, there will always be a question: how can there be a DT on the basis of accounting? If I go by my AS10 PPE, if I go by SLN, if I go by WD, whatever is the method, and if I do the accounting appropriately, I will have to look at the useful life of assets. Okay. So say for example, laptop may have, I'm just taking an example, rough example, of a utility of 5 years, okay, or 4 years. Okay, if I estimate that as a useful life, then my rate of depreciation for laptop is 25% if I am taking that as a SLM or a WDV as the case may be. Whereas if I am looking at income tax, I must be having a different percentage, which may be a 60%. Okay. Accounting has to be done as per accounting standard. And income tax things have to be done as per income tax. So there arises a DTA/DTL as the case may be when we are doing appropriate accounting of PP. Let me put it this way that, maximum of us have never thought of this difference. Let me be honest. Wherever I have asked this question, I've got an answer which actually is true everywhere, that अलग कैसे हो सकता है, वो तो सेम ही है, हम वही depreciation rate उठा के यहाँ पे डाल देते, but have we assessed useful life? So we are assuming useful life of an asset, for example 60% first year, 40% next year. So मतलब हम लोग लैपटॉप का एस्टिमेटेड यूजफुल लाइफ हम 3 साल मान के चल रहे, so 3 years में लैपटॉप इज वाइप्ड आउट फ्रॉम द अकाउंट इन अदर वर्ड्स. बट अगर प्रॉपरली यूजफुल लाइफ अगर हम असेस करते, तो मे बी इट विल बी 4 years और 5 years एंड देयर इज अ DTA और DTL एज द केस मे बी. अभी द नेक्स्ट क्वेश्चन इज, मुझे क्यों करना है एक्स्ट्रा मैन, मैं क्यों करूं टू कंप्लाई विद द अकाउंटिंग स्टैंडर्ड्स? Either you will have to say that this is my useful life, and if you are saying I want to do useful life like this, and then you choose a percentage, you can't change the percentage every year, right? So if it is SLM, and if I say that okay 4 years, तो 25% हर साल, ये साल 25, next year 30, 45, ऐसे नहीं कर सकते. If we are doing that accelerated depreciation, then why? That is only in income tax. Second thing, yes, this less than 180 days, more than 180 days, this happens in income tax. Accounting में ऐसे नहीं होता. Accounting में number of days. So always there bound to be a DTA, DTL on account of depreciation. But in non-company entities, please correct me if I am wrong, and no offense meant to anyone, but we all know कि इतना डिटेलिंग में अकाउंटिंग नहीं होता. अकाउंटिंग भी इनकम टैक्स के डेप्रिसिएशन के हिसाब से ही होता है. So that's the difference. Again, 43B can be a DTA, DTL item. Gratuity or leave encashment is paid and not paid, and then paid within the due date, all that stuff can be a DTA, DTL item. That is where DTA, DTL arises in case of a non-company entities. And if I take a step back, maximum cases में DTA, DTL किया ही नहीं रहता है in case of non-company entities. And everyone thinks that it is not applicable to them. It is not so. If you do the accounting as per the accounting standard, you will get a DTA. You will always get a DTA if you are doing the accounting, if you are doing your accounting as per the accounting standard. And you have to do, okay? If there is a non-compliance of the accounting standard, and if you are auditing, you are supposed to qualify also. Because this PPE, the accounting of the PPE will become material. It won't be completely immaterial. If I'm thinking that way, that okay, ये तो immaterial होगा, I will sail through, but then you will be non-compliant in terms of accounting policy disclosure, useful life disclosure, change in useful life disclosure, technical assessment disclosure. So there are like a number of things that you can think of. This is one major, plugin that we have to start looking at. Now coming to AS22, it is applicable to 1, 2, 3 level. It is not applicable to 4. It is applicable only to the extent of current tax to level 4. Okay. Now, what is the transition provision? Okay. Transition provision is in case on the first occasion where a non-company entity gets classified as level 4, the accumulated deferred tax asset or liability appearing in the financial statements of immediate previous accounting period has to be adjusted against opening revenue reserves. So the entity was level 2, level 3 till last year. Now this year it has fallen into level 4. So whatever is the DTA, DTL that is accumulated, you will have to transfer it to opening revenue reserve. Okay. And if it becomes from 4 to 3, then you will have to start creating DTA, TTL as the case may be. Okay. Intangible assets, the disclosure is not applicable to level 4 with respect to the internally generated intangible asset and other intangible asset, the reconciliation between the opening balance and the closing balance, impairment loss that is reversed to the P&L. Fully amortized intangible assets similar to PPE, what we saw is the encouraged disclosure that is there in the intangible asset also, that is exempted to level 4 entities. Impairment. Now, when we do impairment, we take value in use, right? And then we take the overall value. So, in case of level 2 and level 3 non-company entities, they are allowed to measure the value in use on the basis of reasonable estimate instead of computing the value in use by present value technique. So, PV technique is not necessary. So, discounting cash flow and all that stuff is not necessary in case of level 2, level 3. So, if level 2, level 3 chooses to measure value in use by not using present value technique, relevant provisions of AS 29, so the discount rate and the cash flow and all that, forecasting, all that is exempt, and accordingly the disclosure is also exempt. But you'll have to just put a note that I have used this, right? In case of individual asset or CGU is recognized or reversed during the period and it is material, the reportable segment, the segment related things, those are not applicable because the segment reporting is not applicable to 3 and 4 here. Again, since that CGU concept you are not using, so the related disclosures are not applicable here. So accordingly, level 3 and level 4 do not have the applicability of these two. Level 2 will have the disclosure. Okay. Now coming to contingent liability and contingent asset. Okay, so we give that reconciliation of opening balance, closing balance, and movement during the year. So that disclosure is not required in case of AS 29 for level 2, 3, and 4. Then for each class of provision, we used to give the nature of obligation, expected timing of resulting outflow, uncertainty indicators, and then reimbursement of any asset and things like that. So these things are again not applicable to level 2, 3, and 4 entities. So these are the list of exemptions. We have run through almost all the all the accounting standards to look at the exemptions. Now let us look at the frequently asked questions. With these FAQs, what we did when we were preparing the technical guide, what we thought is that there may be a number of questions that may be popping up in everyone's mind. So let us compile and put it through in the form of a frequently asked questions. So if I can ask the team members, or if I can request the team members to be active here, and if they can give you answers to the FAQs, it would be great. Okay. First question, what is the date? What is the date which new scheme of classification of non-company entities announced by ICI as on 31st March 2021 is applicable? Any answers there? We discussed that in detail. I'll wait for 15-20 seconds for each of the things. April 23. I'm talking about the announcement. Any other answers? Please let us be interactive. If you want to unmute and speak, I think, is that possible, Tejas, to unmute and speak?
Yeah, it is possible. We'll allow them to speak. Or
Yeah,
else
I'll wait.
participant can put in a chat box.
In the chat, yeah. That would be easier, yeah. So if you can put up in the chat, that would be great.
Yeah.
Yeah, the announcement came into effect from 2021. Guidance notice from this year. Thanks for answering. Okay. Next question, whether any changes in applicable accounting standards has been done. Has the ICA changed any accounting standards? Yes, no? Let us not be hesitant. It's okay. We all are learning from each other. So let us be participative. There's nothing right or wrong here. Yeah. Sorry, the answer is there are no changes to the accounting standard that has been done. Actually, only the applicability has been changed. In the sense, accounting standard remains as is. Some paras applicable to some entities now, some paras are not applicable. There are no changes to the accounting standards per se. Okay, that is to be noted. Thank you for answering. Whether each non-company entity is required to comply with all accounting standards of ICA. Absolutely right. I think 2-3 people are answering. Request others also to participate. It will take a second to give your answers. Thank you so much. Yeah, it's as per level 1, 2, 3, 4. And yes, not all standards are applicable to everyone. Agree. For the purpose of applicability of accounting standards, non-company entities are classified into how many categories? It was earlier 1, 2, and 3, and now it is 1, 2, 3, and 4. Yeah, that is right. Thank you. That is right. Next question. Whether this classification criteria is applicable to non-company entities who may be required to follow Ind AS as per relevant regulatory requirements applicable to such entities. Got one answer? Anyone else, please? Is this applicable to Ind AS companies? No. Where Ind AS is to be followed, they have to follow Ind AS. This 1, 2, 3, 4 actually does not apply to Ind AS because this is based on accounting standard. Thank you so much. Next question. Whether exemptions given to level 2, 3, and 4 can be applied partially. Means I take use of some of them and I don't use some of them. Is that possible? Okay. More people can participate, please. You can put your answers. It's okay. Let us be more interactive. Yeah. You can choose some exemptions and you can leave some exemptions. So you are basically giving voluntary disclosures. So that is fine. But then you have to put it out as to what are the exemptions that you are taking up and what are the exemptions that you are actually not taking up. So you can pick and choose. Voluntary better disclosure is always encouraged and it is always welcome. Thank you for answering. Next, think, yeah, whether the entity can decide not to avail exemption relaxation available to it. Similar answer, yes, it can give voluntarily more disclosures. Now, there was a model non-company financial statements. So, what is the difference between the model and the technical guide and the guidance note? In model, we also gave, when it was WRC model financial statements, we also gave notes. That is descriptive notes also, background of the company and something about the segment, stuff like that. And then when it became a technical guide, certain things went out because it's more authoritative pronouncement. And then when it became a guidance note, then some more things went out. So which is more authoritative? Model financial statements, guidance note, or technical guide? Which is more authoritative? Any answers here? Any thoughts, suggestions? Guidance note, okay. Guidance note, technical guide, yeah. Thanks. That's right. Guidance note is more authoritative and it is applicable on all the members and we are obligated to follow it. Thank you. And before this technical guide, I would like to spend a second on it. The technical guide is also authoritative pronouncement, but then it is always, technical guide is always recommendatory, and guidance note becomes mandatory. So if the entity was covered in level 2, 3 or 4 previously, but now it has transited to level 1, means upward transition. पहले मैं 3 में था, 4 में था, 2 में था, but I've gone to 1 now. In such case, what are the disclosure obligations? Everything becomes applicable to me or nothing becomes applicable to me? How is it? Any thoughts? Everything? Okay. Anyone else? There's a small catch here in the announcement. Everything becomes applicable is right. When you go upwards, when you were earlier in 2, 3 or 4 and now you go to 1, right? So you had qualification, you had exemptions and relaxations, but now you don't have those exemptions and relaxations, right? Now here what happens is, if you read this portion where my cursor, I don't know whether my cursor is visible, the relevant standards or requirements become applicable from the current period, and figures for the corresponding period of the previous year need not be revised merely by reason of it having ceased to be covered under 2, 3 or 4. So you have to give detailed disclosure for this year, but you have exemption if you were not covered by that standard in the last year. Now for the comparatives, so the standard is giving you a exemption that you may not have to reclassify everything. So you will have to put a note to that effect. The fact that the entity was covered in level 2, 3 or 4, as the case may be, in the previous year and it had availed certain exemptions has to be disclosed in the financial statement. Also, these facts, these figures have not been revised also has to be put in there. Generally, when we make a financial statement, we always reclass the financial statements and prepare the comparatives as per the existing balance sheet now. So this is a very typical relaxation that is applicable. Everything is applicable from this year. However, you can have exemption to the extent that you don't have to pull out these things from the last year thing, or maybe if I have to simply put it, Ind AS जब भी अपन अप्लाई करते हैं तो फर्स्ट बैलेंस शीट बनाने के लिए स्टार्टिंग से हम चालू करते हैं और फिर बाद में उसका कंपैरेटिव बनाते हैं. तो यहाँ पे वो बोल रहा है कि आप उसको 1 साल पीछे जाके उसका कंपैरेटिव आपको कॉल आउट करने की जरूरत नहीं है. यू हैव टू गिव ओनली दैट डिस्क्लोजर दैट आई एम नॉट डूइंग दिस. This is very, very typical and it is helpful, and it is made so that, you know, the smaller entities do not face that hardship. Who can use the model financial statements or the guidance note in the publication? Is it open to everyone, or you can pick and choose? Any thoughts? Who can use this? So along with the guidance note, in the institute website, if you go, there is an Excel format also. So the thought was, you know, everything is in generally in PDF, और फिर general instruction ऐसे guidance note के अंदर general instruction ऐसे ही है, जैसे schedule 3 का है, वैसे ही general instructions है. Then what we thought is that it's easy for people to comply with. तो इसके लिए उसका Excel बना के हमने साथ में लगा दिया. Okay, so is it who can use this? Basically everyone can use this, right? Other than where there is already a standard that is standard format that is published in case of, you know, in the certain states in the test, then you have, sorry, in the certain states for the trust or for some cooperative society and things like that, you have a certain format in which the balance sheet has to be drawn. If that is there, then you don't use this. Otherwise, you have to use this. Which are the types of non-company entities who can make use of the financial statement? You can make, like, this is what we started with. LLP, there is another guidance note on LLP, which is actually on similar lines. Next question. Is it compulsory to follow the non-company financial statements announcement? I would change the question here. This was made earlier, so it says model financial statements. I'm changing the question whether it is compulsory to follow the non-company financial statements guidance note. Yes, no? Is it mandatory to follow non-company FS guidance? Thank you. Yes, that's right. You have to follow it when you are doing your, from this year, you have to do. Yeah. I'll change that question because earlier it was model financial statement. Disclosure requirement if the entity's turnover reduces and cease to be that level. So we saw in another question about increase, like from level 2, 3, 4, I'm going upwards. Here I'm discussing about coming downwards. What happens then? Upward जाऊंगी तो मेरे को तो comparative देना नहीं है, तो फिर आई एम एग्जाम्प्ट देयर एंड आई विल गिव अ नोट दैट लास्ट ईयर तो मैं सेकंड थर्ड फोर्थ में था, अभी मैं फर्स्ट स्टैंडर्ड में आ गया तो मुझे नहीं देना है. नाउ व्हाट हैपेंस अगर मैं फर्स्ट में थी या सेकंड में थी और मैं थर्ड या फोर्थ में. What happens? Any thoughts? I will get disclosure exemption. Yes, right? There is a small catch again. When you are level 1 and then you cease to be covered in level 1 and you are getting into 2, 3 or 4. So you will not qualify for exemption on or relaxation available to that level unless it ceases to be covered for 2 consecutive years. Okay? So जब भी अपवर्ड जाना है तो जैसे हमको एग्जाम्शन मिला है कि मेरे को उसी साल सब कुछ रीडू करके इंडेक्स के जैसे वापस नहीं देना है कंपैरेटिव, वैसे ही अगर 1 से अगर मैं नीचे आ रही हूँ so then immediately in that year you can't take all exemptions, relaxations. You will have to wait for 2 years. Maybe your business is seasonal, something has happened to the business, or there is a COVID kind of a situation where business have fallen. So that is why those are okay, then the exemptions will start flowing to you. If for 2 consecutive years, if you are in the another level, then only you can actually start taking the exemptions. So in the year in which you transition from level 1 to level 2, immediately नहीं मिलेगा, बाद में आपको मिलेगा. Okay, these are some small fixes that you will have to always remember. That's why I said that, you know, you have to start all your small company, small entity audits by applying that 1, 2, 3, 4 level. Every year that has to be done. 3 से 2 गए, 2 से 4 गए, तो फिर आपको 4 से 1 गए, तो आपको वो सब ट्रांजिशन याद रखना है अपवर्ड्स, या फिर नीचे की तरफ आ रहा है 1 to 2, 2 to 3, तो भी आपको वो exemptions याद रखने हैं. So that is why that applicability checklist will play a very important role here. Can entity follow the accounting standards on voluntary basis even if exemption has been given for the particular standard? We already answered this question. Yes, voluntary disclosures are always welcome. What are the disclosures as per AS 27? He has to disclose the information that is required in its separate financial statements. And if you're doing that, then you have to actually include everything in your financial statements. Okay, whether AS 27, financial reporting interest in joint ventures, is applicable to level 4 non-company entity. Can we look at some of the answers, please? PPT, yes, I will share. Answers I'll take, questions I'll take up at the end once we go through the entire stuff. Is AS 27 applicable to level 4? Yes, no. Some answers, please. Okay. No. It's generally no, but you have to remember that note C, note D. If at all you are doing, then you have to follow the principles. Generally, no, not applicable. If at all you are using, then use the principles of 27. Whether non-company entity is required to prepare consolidated or interim financial statements. Okay, Again, answer is similar. No, they are not required to, but if at all they are preparing, then follow the same standards as that are required in 21, 23, 27, 25, as the case may be, right? As such, not required at all. Does the non-company entity which avails exemption, relaxation given to it shall disclose by way of a note to its financial statements that it is in MSME? That means it is one of those 1, 2, 3, 4. So is it necessary to give that in the financial statements? That I am level 2 entity, I am level 3 entity, these are the exemptions that I am taking, these are the exemptions I am not taking. Answers here? Yes, it is necessary for me to declare that which level entity I am and what is it that is applicable to me, what is it that I have taken and what is it that I have not taken. Otherwise, no one will understand. So there has to be a background of the company. So first note will always be background of the company. Second note will be always, about what is applicable to me as a statute and how I'm looking at it. Okay. Next one. What is the duty of an auditor in case of financial statement prepared on the basis of other than accrual? I think most of you are tax experts. So as an auditor, how do you look at financial statements that are not prepared on accrual basis? Any answers here? Okay. If permitted under section 145 to follow cash, then fine. So in short, you're saying if not permitted, then you have to qualify. So that's the fundamental accounting assumption. So answer is similar. Guidance note on tax audit, we have picked up the answer from. And this is how it flows. So if not permitted, then you are actually supposed to qualify, or even actually that goes to an adverse report. Not even a disclaimer, it will go into adverse because you're supposed to follow accrual, and if you have not followed accrual, that's a disaster. Your accounting itself is completely wrong. Who can use the cash accounting system? I think this will be a quick one and I'll get a lot of answers here. So everyone knows the answer as permitted under 145, right? What depreciation rates a non-corporate entity use for preparation of accounts, and can the rates from the Income Tax Act be taken? I think we spoke in detail about this. Any thoughts here? Depreciation rates, can I take directly from income tax or should I have it different? Yes, rates can be different because it follows the concept of useful life. In case of accounting standard, it follows the concept of useful life. So you have to prepare, you have to get the basis of useful life. Then you will have to match it accordingly. Whether UDN is required for non-company entities which are not subject to audit. Yes, no? No? Okay. If attested, then yes. Yes, that's the right answer. If you are doing an attestation function, then you have to do. Now, if you are attaching the financial statements as part of 3CB along with the, the tax audit, then actually you're auditing the financial statements also. So there has to be an audit report and there has to be a UDIN for that, and then there has to be a UDIN for your tax audit as well. So that's how it should work. So there is this illustrative 5 that is given under SA 700, and that is for non-corporate entities. So you can refer to that format and you have to use that format for the audit report of non-company entities. So this is very, very important. This is a one-pager audit report that is required when you are doing audit of the financial statements plus audit of the tax. So the 3CD or the 3C B as the case may be. So that is very necessary that you should do both of it. And that one-pager audit report is generally a practice that gets attached with the tax audit report as well, because those things that are stated in the tax audit report is generally with respect to the tax audit. There's nothing about a financial audit that form talks about. So as a good practice, you have to use that illustration 5 of SA 700, make a report, generate a UDIN, attest it, and then affix it. And then another one for the tax audit. Is tax auditor required to comply with accounting standard while carrying out tax audit under section 44AB of non-company entities? I think that's a quick answer. Yes, absolutely. Accounting standard are based on levels 1, 2, 3, 4. You are supposed to follow accounting standards while you are doing accounting. And then while you are doing tax audit, you're supposed to follow the tax rules. Okay, is accounting standard applicable in case of charitable or religious organizations? Any answers here? Yes, right. It is applicable to charitable or religious organization if they are doing any kind of business. That's there in the preface, right? So please, you have to read the preface carefully. And accounting standard becomes applicable if any activity is in commercial, industrial, or business in nature, then you cannot claim exemption from accounting standard. So this publication of accounting standard can be accessed on this. So this is a ebook. There is an Excel sheet also available. So you can look at that, which is on the WIRC, and you can look at the guidance note as well. Okay. So guidance note on company financial statements. This is a LLP one, and then there is a non-company one. So there's a model company financial statements also. I will take a minute, would go off screen and would like to display the accounting, the Excel sheet itself. Just give me a second. I'm just opening these things and I will reshare the screen in a second. If you have further questions, you can keep it posted in the Q&A section. I come to the Q&A section at the end of it. Just give me a second. Just resharing my screen. Yeah. Please let me know if you can see my screen, please.
Yes, it is visible, Padmashri.
Yeah. Okay. I'll quickly browse through the financial statements. One is LLP and one is non-LLP. There are two links that the files itself I have inserted inside the PPT. So you can either use them or go to the link and download them and you can use them. Audit report is in the format illustration 5 of SA 700. Please remember that and then please take that into account. So these are illustrative financial statement based on the guidance note. So this is the balance sheet, name of the non-corporate entity, the balance sheet. So the T form of balance sheet is completely gone out now. It doesn't exist anymore. And basically giving the T format balance sheet is not allowed anymore because now the non-company entities also have this format, right? You have owner's fund, owner's capital, reserves and surplus. I'll just stop at few of the things to explain it further, but I think most of it you all know very well. And then this is based on the accounting standards and the general instructions within the guidance notes, right? Long-term borrowing, deferred tax liabilities. This is net asset minus liability. Other long-term liabilities, long-term provision, Current liability, classify it into short-term borrowing, trade payable, other current liability, short-term provision. Non-current assets, again PPE, intangible assets, CWIP, and intangible asset under development. Non-current investment, deferred tax asset, long-term advance, loans and advances, the non-current asset. Current asset may current investment, inventory, trade receivable. So as is almost like the balance sheet. One more thing, one small question I would like to ask, whether you will have UDIN on the balance sheet and P&L. Yes, no. Whether you will have UDIN on balance sheet P&L, yes. Someone says no. Yes, yes, no. Okay. As per the announcement, no UDIN on balance sheet and P&L. It is only what you certify in the sense that what is it that you are preparing. Financial statements are not prepared by you. So no UDIN on financial statements. It is there only in the audit report. Okay. On the balance sheet, you have your signature, basically. Then your P&L revenue from operation, other income, total income, COGS, employee benefit, finance cost, depreciation, amortization, other expenses, exceptional items. So this is a normal flow of the balance sheet. Partners remuneration, extraordinary item, P&L, and then, partners remuneration and tax, current, deferred, whatever, excess less charged, then discontinuing operation if you have, and that's it. So these are, so what is the advantage of this Excel sheet is that you can actually make a grouping sheet and make a TB, and then you can input into it, and all these are already linked once. Okay. You can use this direct if you are not making substantial changes. When you're making changes, putting in figures, please be careful to recheck the links once. This is already a linked balance sheet. Okay. Linked balance sheet and P&L. So it is easier for members to use. And that's the basis that why we thought that it has to be in Excel and it has to be a linked functionality. Because if it is provided in PDF, again, convert it into Excel and all that stuff becomes, a little bit cumbersome. So this is a completely linked financials. Everything is like this, total, subtotal, everything is there, and then balance sheet actually automatically gets linked once you populate these things. Okay. Yeah. So in the secured loans, yeah. So loans we have as usual, that is borrowings we have as usual classified into secured, unsecured, term loan, loan repayable on demand, deferred payment liability, loans and advances from related party, loan from current maturities, finance lease obligation if any, unsecured loan similar classification. Okay, then a brief about the nature of security, terms of repayment, loans guaranteed by partners, proprietors. It has to be disclosed. Deferred tax liability, give the entire breakup and the movement. Okay. Then other long-term liability is simple. Then provision for gratuity, leave encashment. So long-term, short-term classification if you have done a actuarial valuation. If not, then everything gets classified accordingly. Then trade payable, MSME, non-MSME is mandatory because this comes from the MSME Act itself. Correct. So that's how it is. Then MSME table that is required again. Amount due, interest paid, interest not paid, accrued at the end of the year. Then other current liability, normal items, current maturities of long-term interest accrued but not due, interest accrued and due, income received in advance, and unearned revenue. These are the normal items. Now balance sheet, yes, PPE. PPE is like gross block and net block and depreciation and adjustments. Okay. Now what is the difference between the model financial statements and this is that if you see the model financial statements of WRC, you may find it on WRC website. This note number 1 to 3 है ना, ये 1 2 है ना, significant accounting policies भी उसमें illustrative है, वो भी बना के डाल दिया था हमने, और brief about the entity का भी थोड़ा wording बना के डाल दिया था, so fill in the blanks रह गया था, but then इसमें significant accounting policies में सारे accounting policies का हमने multiple options दिए हुए थे वहाँ पे, so it is very easy to pick and choose from the significant accounting policies also, like revenue recognition, accounting accrual, going concern, ये सब चीजें already वहाँ पे है. So it becomes easy to pick and choose. But when it came to the guidance note level, obviously those things cannot be given when it is being given by ASB. That's why they said that these descriptive things we will have to delete, and then they agreed to actually go ahead with the Excel sheet. Okay, and some changes were made between that format and this format. So format you can take from here, और notes वगैरह वहां से आप लेके उसको amend कर सकते हो. So that is again illustrative. उसको जैसे चाहिए आप changes कर सकते हो. It's easier. Yeah. Then PPE we were talking about. So last year, current year, similar disclosures. Then investment, ये investment है, non-current, current, quoted, unquoted. फिर सारे डिस्क्रिप्शन दिए हैं, जो आपको अप्लीकेबल है वो रखना है, नहीं रखना ही है वो तो नहीं रखना. देन ऑल दिस डिस्क्लोजर लाइक फेस वैल्यू, नंबर, यूनिट्स, फिर नीचे जो मार्केट वैल्यू देना होता है सब कुछ है वहाँ पे. So you can start filling in the same format. You don't have to make another format. Loans and advances, again similar classification. Secured, unsecured, capital advance, otherwise. Okay. Another non-current asset. Inventory. इन्वेंट्री में सिंप्लीफाइड है, वो मतलब उतना डिटेल्ड नहीं है, रॉ मटेरियल ये वो. इफ यू वांट टू गिव यू कैन गिव, you can otherwise restrict also. वो listed company में जितना डिटेल होता है cut down to a certain extent. Trade receivable 6 months, less than 6 months, similar 6 months का due date of receipt है. So the date that they are due for receipt है, so similar to schedule 3 यहाँ पे है ये. So you have to be careful. You will have to disclose properly. Cash and bank balances, yes, cash and cash equivalents or checks on hand and cash on hand, it is always available. Other bank balances, earmark deposits, and other current asset. Then this is P&L. So P&L is again sale of products, services, grants, donations, other income, interest income. COGS में जितना आपको चाहिए उतना ट्रेडिंग कंपनी, मैन्युफैक्चरिंग कंपनी, सॉरी नॉट कंपनी, एंटिटी, उस हिसाब से आप इसको कट डाउन कर सकते हैं. एम्प्लॉय बेनिफिट, अगेन द समरी, फाइनेंस कॉस्ट समरी, डेप्रिसिएशन, अमोर्टाइजेशन एक्सपेंस आल्सो समरी, and whatever expenses are applicable, not applicable, you can actually pick and choose. Now the general question, LLP का भी similar ही है, only partners capital वाला schedule change है, that's it. Okay. अभी एक क्वेश्चन इसके बाद ये आता है, जनरली व्हाट आई हैव सीन इज अभी इतना ज्यादा डिस्क्लोजर क्यों देना, बिकॉज समवेयर इट वाज फेल्ट नेसेसरी दैट सर्टेन डिस्क्लोजर्स आर नॉट बीइंग गिवन करेक्टली. दैट इज व्हेन दिस एंटायर प्रोजेक्ट स्टार्टेड एंड देन इट गॉट टू दिस लेवल ऑफ मेकिंग इट appropriate. क्योंकि क्या हो रहा था, there are lots of financial statements that were getting signed without even being properly checked and not adhering to certain disclosure norms, and that had caused a lot of problem in the sense that the company, the entities used to come to say that I want this for giving to the bank, giving to someone else, be giving to this, giving to that. And then any balance sheet used to get signed and any P&L used to get signed. So that also posed a risk. And that is why this format was brought in. Okay. And that is why these elaborate things. Now, the next question is, इतना सब करने के लिए fees कौन देगा? Yes, of course, that's a valid question. You have to start educating your clients, and then, since every one of us has to do this, efforts has gone up, you have to ask for more fees. हाँ, अभी ask for more fees बोलना easy है, मिलेगा नहीं. Yes, we have to start educating, keep telling them, and then that has to happen because IC has already come up with this as a guidance note. क्योंकि 2 साल पहले सिर्फ मॉडल था, उसके बाद टेक्निकल गाइड 2 साल रहा, अभी ये साल से ये गाइडेंस नोट है, तो फिर अभी तो अपने को करना ही पड़े, अपने पास चॉइस नहीं. अगर अपने को कंप्लायंस करना है तो देन वी हैव टू गेट रेम्यूनरेटेड. सो इट्स अ chicken and egg story. How much we want to offer things for free? I'm sorry, this may not be relevant, but then yes, of course, from a practice perspective, I thought it is relevant that we have to educate our client that the efforts have gone up, the risks have gone up, and accordingly we have to have our fees, right? And then to do so much of disclosure, वो बोलेंगे कि इतना डिस्क्लोजर की मुझे जरूरत नहीं, आप क्यों कर रहे हो? तो आपको बोलना है कि ये मतलब आईसीए ने मेरे को ये कंपलसरी किया है तो मुझे तो देना ही पड़ेगा। तो अगर मुझे देना पड़ेगा तो ऑब्वियसली तो इतना सब फॉर्मेट रिव्यू करने के लिए, ऑडिट करने के लिए मेरे को टाइम लगेगा, या फिर आप बना के दे रहे हो तो मुझे टाइम लगेगा। अकॉर्डिंगली उसके हिसाब से मेरा फीस बढ़ना ही चाहिए। So this is one perspective that I have. Now this is not the chamber's perspective or from ICA perspective. This is my personal perspective, because it is necessary for us to get properly remunerated as well. Audit documentation, I'll quickly touch upon, not complete essay 230, but just few of the things, because you're talking about preparation of financial statement of small entities as well as the the detailed audit of the same. We have to prepare audit documentation for every audit. So whatever is not done is not documented is not done. We have to always go by that principle to be adopted for audits of other historical information, whatever we have taken. Laws and regulations that may establish additional requirement. If there is any other law that is applicable to the entity, for example, कोई restaurant business में है तो उसको food and safety norms applicable है, कोई क्रेडिट कंट्रोल सोसाइटी है तो उसको कुछ आरबीआई नॉर्म्स एप्लीकेबल है, कोऑपरेटिव बैंक है तो उसको क्या एप्लीकेबल है, सो दैट वी हैव टू ऑलवेज कीप इन माइंड। एसए 250 टेल्स अस specific documentation required of essays do not limit application of this essay. मतलब one essay does not override the other essay. Whichever is better, you will have to always use it. It always helps in planning an audit, assist supervision and review of the audit. It results in better conceptual clarity, clarity of thought and expression, facilitates better understanding and avoid misconception, supports and evidence work performed and compliance with the relevant standards. So that's why I was asking that, you have to make a small checklist, applicability checklist, and start your work from there. Audit documentation of smaller entities, it can be less extensive, but it has to cover everything, maybe in a single document or multiple documents. Like understanding the entity, internal control, overall value strategy, plan. It may be substantive, it's fine, materiality, ये वो, बट जनरली ये सब डॉक्यूमेंट होना चाहिए। मटेरियलिटी वगैरह एक्चुअली डॉक्यूमेंट होना चाहिए, नहीं होता है तो प्रॉब्लम है। ईएल होना चाहिए आपका। ऐसे 210 का इम्प्लीमेंटेशन गाइड का एक टूल भी है, अगर आप CAQD के वेबसाइट पे जाएंगे तो वहां पे एंगेजमेंट लेटर सारे क्लाइंट का आप एक साथ बना सकते हो। वैसी एक यूटिलिटी भी बनाई है हमने। तो इफ यू यूज दैट यूटिलिटी, ऑल यू हैव टू डू इज दैट इट इज अ वेरी क्लियर एक्सेल शीट। वहां पर जाकर आपको फर्स्ट शीट में आपका नेम, क्लाइंट का नेम और उसका पैन नंबर और बेसिक डिटेल्स वगैरह डालना है, एड्रेस वगैरह डालना है। इन वन शीट यू हैव टू फिल अप एंड देन यू कैन सिलेक्ट विच आर द टाइप ऑफ ऑडिट, मतलब स्टैट ऑडिट चाहिए, टैक्स ऑडिट चाहिए, वो आप सिलेक्ट करेंगे। तो आप एक जनरेट बटन दबाएंगे तो आपका 25, 40, 50 जो भी है आपका एंगेजमेंट लेटर इकट्ठे डिलीट ये अपने जनरेट हो जाएंगे। and all you have to do is that send the engagement letters for signing. अगर आपके पास EM साइनर या ऐसा कुछ अगर एडिशनल टूल भी है तो वहां से आप उसको API बना के वहां पे कनेक्ट करके फिर वहां से साइन करके ही भिजवा दे सकते हो। तो इट इज वेरी इजी। तो एंगेजमेंट लेटर प्लीज बनाइए विथ ऑल द टर्म्स एंड कंडीशन। वहां पे हमने जो प्रैक्टिकली एंगेजमेंट लेटर बनाई है CAQD पे, उसमें सारे क्लॉजेस है, इंडेमनिटी है, अल्टीमेटली ऑडिट इज ऑल्सो अ कॉन्ट्रैक्ट, प्लीज अंडरस्टैंड दैट। उसमें इंडेमनिटी है, लिमिटेशन ऑफ लायबिलिटी है, डाटा प्रोटेक्शन है, कॉन्फिडेंशियलिटी है, ऑल दैट इज नेसेसरी फॉर अस एज प्रोफेशनल, सारे क्लॉजेस वहाँ कवर्ड है। एंड प्लीज एंश्योर कि आपके हर एक एंगेजमेंट के लिए एक एंगेजमेंट लेटर हो, बिकॉज इट comes to use when everything is good, everything is rosy, and something goes bad, it gets worst. So you have to have a engagement letter over there for everything. Ownership retention. Documentation is the property of the auditor. If you want, you can give extracts or full working papers to someone, and then the auditor has to retain the engagement for a period of 7 years. That is mandatory, and archival period is 60 days. 60 days में वो खत्म होना चाहिए, right? I think that's all I have to share now. I would like to take up question answers if any. I would look at the Q&A box.
Yeah, Padmashri, there are a couple of questions in Q&A box.
Yeah. If we have not complied non-corporate financial statement, then what will be the penalty? So basically, as per the framework, guidance note is applicable to all the practicing professionals. If you are not following the guidance note, it goes under professional misconduct. Okay, if something comes up and then if it is pointed out that the guidance note is not followed, then it is actually goes under the professional misconduct. Okay. it is mentioned as effective note. This guidance note is effective for financial statements covering period on or after 1st April 24. Technical guidance and non-corporate standards superseded by this guidance note. Then whether it is mandatory from 23 cover FY 23-24 or 14-24. So it is applicable from this year, that is 14-23-24. It is not 24-25. It is applicable from this year itself. And then this technical guide already existed from 2 years. So it is recommendatory and you should be actually following it already. And that is the time given before converting it into guidance note. And you have to apply it. Any other questions? I think a lot of questions are covered through FAQ also. Any other questions?
I think there are no further questions.
Are there any questions in the chat? No?
I
Yeah,
think one,
PPT
two,
per se, I think I will send it to 3-4 people have asked for PPT, but that I will share it with the chamber and they will further forward it
yeah.
to them.
So we will share it. We will upload on CTC website under accounting and auditing tab, the presentation which will be shared by Padma Shri. So people
Yeah,
can
I think
download
there
it
is a
from there.
comment here in chat whether such format is mandated by law or by ICI. Some of the clients feel it is too complicated to prepare such detailed information disclosure and they are not willing to draw up. In such scenario, do we need to qualify if we are doing audit under section 44 AB or any other sections or in accordance with SA7? Yes, so the Bible is your announcement of non-corporate entities. So that's authoritative pronouncement. Now you have a guidance note. So the announcement classifies 1, 2, 3, 4 level. So your qualification will be based on that announcement. Then it will be the next basis will be the guidance note. On the basis of that, you will have to qualify if adequate disclosures are not provided. And SA 700, you can use 705 form. 700, 705, you can use for the financials, the audit report format.
I think one of the participants wished to speak, Mr. Anil. Once, I'll just allow him.
Yeah, sure.
Yes, Mr. Anil, I think you wanted to speak something. Hello.
Hello. Anilji.
It's not audible.
Hello, madam.
Anji.
Hello, madam.
Yeah.
In case till last year we have followed income tax rate for plant and machinery and asset, and now we have to comply with this guidance note and we have to follow that standard. Then how to convert? Means some in one plant we have adopted SLM, another plant we have WDV, adopting the income tax rate. Now I want to convert to this standard, being a mandatory. So how to do it?
So it is a change in accounting estimate. When depreciation changes, it is change in accounting estimate. You will have to pre-calculate the depreciation, and then accordingly you'll have to give the effect of the difference
it means for last 10 years I had been following this, 10 to 15 years maybe. So one particular asset I have to recalculate from the inception, or from this year onwards I can do it.
So you will have to follow that accounting standard in this respect for change in depreciation, which is actually change in accounting estimate. वो pre-calculate करके जो difference आता है ना as per this method and as per that method, तो दोनों का फिर differential आपको charge करना है revenue में, sorry आपका revenue reserve.
सपोजिंग मेरे पास 150 असेट्स है, अलग अलग मशीनरी, एक प्लांट में WDV, एक में SLM, तो मेरे को पूरा 10-15 साल का पूरा वर्क बैकवर्ड करके अराइव करना पड़ेगा करंट डेट में.
उसमें आई थिंक देयर आर सॉल्यूशंस अवेलेबल. आप कट ऑफ लेके उसके हिसाब से भी कर सकते हो और 2 साल क्वालिफिकेशन में जाएगा, उसके बाद स्मूदन आउट होएगा. नाउ दिस बीइंग अ स्पेसिफिक क्वेरी, आई थिंक वो मतलब डिफिकल्ट है आंसर करना आपका सिचुएशन के ऊपर, बट आपको प्रिंसिपल तो वही फॉलो करना पड़ेगा कि आपको पहले से जो आप कैलकुलेट कर रहे हैं विज़ावी अभी का जो आपका आ रहा है उसके हिसाब से आपको डिफरेंशियल कैलकुलेट करके फिर उसको रेवेन्यू वगैरह में मतलब रेवेन्यू और रिजर्व्स उसके हिसाब से आपको चार्ज आउट करना पड़ेगा। कॉन्सेप्चुअली ये आंसर है सर। प्रैक्टिकली आपको जो मीन्स आपका जो डिफिकल्टी है दैट आई कैन अंडरस्टैंड एंड देयर हैज टू बी अ स्पेसिफिक सॉल्यूशन, देयर कैन बी अ स्पेसिफिक सॉल्यूशन दैट कैन बी वर्कड आउट फॉर दैट आल्सो।
क्योंकि लास्ट 15 साल में एवरी ईयर देयर इज सम एडिशन एंड वेरियस न्यूमरस एडिशन, स्मॉल एंसिलरी मशीनरी डेट ऑल्सो SLM WDV सबको 15 साल का रिकैलकुलेट करेंगे तो इट शुड बी, इज देयर एनी गाइडेंस ऑन दिस?
Yes sir, it is there in the accounting standard.
Yeah, but that says that I have to go from the date of inception and I have to work up to today.
Yes sir, that is the guidance, that is what I'm saying. Conceptually this is the understanding and this is the solution available, but practically आप एक कट ऑफ लेके भी कर सकते हो. That is a custom and practice that exists in case of very old assets. और फिर उसमें क्या होगा, to a certain quantum आप 1-2 साल उसमें qualification आएगा, then it gets smoothed out क्योंकि फिर आपका old value automatically इतना साल में depreciate हो गया रहेगा.
तो व्हाट इज द बेसिस फॉर कट ऑफ, क्या कट ऑफ लेना चाहिए, क्राइटेरिया फॉर सिलेक्शन ऑफ कट ऑफ?
मैंने वही आपको बताया कि ये बहुत पर्टिकुलर क्वेश्चन है. अनलेस वी गेट इनटू डिटेल्स आई विल नॉट बी एबल टू आंसर दैट. ओवरऑल बेसिस पे मैं अगर आपको बताऊंगी कि 2 साल का आप कट ऑफ ले लो, आई डोंट नो द एंटायर हिस्ट्री. आप 10-15 साल बोल रहे हैं, 20 साल हो सकता है, 100 साल हो सकता है, आई डोंट नो. सो डिपेंडिंग ऑन द असेट, डिपेंडिंग ऑन द साइज, डिपेंडिंग ऑन number of things that gets added, so that can be worked out. Practical way is available, बट यस फिर भी प्रैक्टिकल वे करके भी 2 से 3 साल क्वालिफिकेशन जाएगा उस पे, अगर हम कंप्लीटली 10 साल का एक साथ नहीं ले रहे हो तो.
थैंक यू.
Thank you.
Someone is asking where is the link to find this utility. It is on ICA website. Below the guidance note there is a link for this utility. So guidance note है, उसके नीचे दोनों एक्सेल शीट का भी लिंक है, so you can use that. All the links are provided in the presentation itself. You can use that as well.
I think
Any
all
other
questions
questions?
have been answered. I think all questions have been answered, Padmashri. I think thank you for an insightful session on a non-corporate, and it was very much required because I think awareness was very limited, and I think you covered the applicability quite well as to which standard and what is applicable to which entity, which are the level of entities, and especially one thing that if it is a level 1 entity, then the disclosure requirement continues for 2 years. I think that is also very much important. Otherwise, it always feels that once you are moved downward, then you need not follow the disclosure. So I think that was a good FAQs which has been covered in your presentation. With this, I would request Yogesh Amal to propose a very hearty vote of thanks to you.
Thank you, Tejas bhai. First of all, thank you, Padmashri, for accepting our invitation. Friends, we all will agree that Padmashri has nicely covered following aspects of this guidance note. That first of all, why was there a need of this guidance note? Various applicabilities of accounting standard to non-corporate entities and various requirements under this guidance note. Friends, we could not have any better speaker than Padmashri, as we all know that she was instrumental in part of the team which had devised this guidance note and technical note. So Padmashri, we at CTC thank you for accepting our invitation and sharing your thoughts on financial statements of non-corporate entities. I request all the members to acknowledge our effort with a big round of applause. Thank you, Padmashri.
Thank you so much. Thanks a lot. I think it was a great interaction and I was happy to actually see so many answers for each of the FAQs that I was putting up. It was quite interactive and interesting. Thank you so much. Thanks for giving me the opportunity. And thank you everyone who took out time to understand, attend and understand and ask questions as well.
Yeah.
FAQ was your FAQ system was the highlight of the entire session.
Yes.
Yes.
Very
Thank you so
interesting.
much, sir.
Very
Very
interesting.
appreciated. Very much appreciated.
Practical situations. Thank you so
Yes,
much.
sir. All these tiny bits, sometimes bother and you don't know where to go, whom to ask. So kind of whatever questions that kept coming in my thoughts and in others also, just putting up everything. Some may be silly also, but I think it helps at times to even ask silly questions.
No.
Yeah.
These are realistic questions. Whether we term it as silly or intelligent is not a question. These are a realistic question and comes to everyone's mind.
Yeah, thank you. Thanks a
Thank
lot.
you.
Thanks.
Bye.
We will be closing the meeting.
Have a good
Thanks.
weekend. Bye.
Thank you, everyone. Thank you so much.
Thank you. Thanks all participants. Yeah.